Iran just attacked ships in the Middle East. This is causing a bit of chaos on the charts. Right now, everybody across X is buzzing. Half of them are saying there's going to be an altcoin season right now, including OG author Hayes. This guy runs his own VC firm. Therefore, he's very entrenched in the type of data we'll be covering right now. We had just hypothesized. Oh yeah, this is coming out within the hour. News in the Middle East. Have you guys heard about this? Iran sent missiles after a US ship. Looking at the DXY, the Sunday reopened, started trending in our direction. All of a sudden it turns around. Look at Bitcoin. Bitcoin, though, is taking the path that we had kind of hypothesized in our group based on durable goods. It actually busted above the 80K trend line, looking strong right now. And soon, altcoins are on deck to follow. Based on this hypothesis, I'm going to break down with you guys step by step. This is the exact tactic that we used to find other 30x gainers. Right now, as far as I'm concerned, keeping all my tentacles out there, looking for other people who have been catching monsters because I want to know how they're doing it. We've got the best track record of 2026. And I'll show you what we're doing on the Kaspa chart to start. Because we really built a channel around trading Kaspa way back in the day. I'll show you this exact technique that we're using today, 4 different sectors, while Kaspa's catching up with the hard fork. So we'll be able to see when this is going to impact Kaspa, and then we're going to take it through the checklist that I've built into the altcoin market, taking a look at projects like bio and other AI sector projects specifically. As we're getting warmed up with this live stream, who knows what happened right here in April? This is 2023. So the Fed is punishing the economy because of all the money they printed from COVIDs. They've got quantitative tightening in full effect. They've got rates hiked up. They're pulling liquidity out of the system. Right here, because of all of their punishing of the economy after the money printing, some of the banks in California started collapsing. Circle Bank, definitely one of them, and its partner regional bank. So the Fed saying, whoa, 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 we might have a bank run here. They make a huge pivot. And this is, of course, in our checklist we'll be covering today, showing you primarily in 2026, but I wanted to use this Kaspa example because you guys are mainly familiar with Kaspa. And then we're going to take it into different sectors for specific altcoin rallies. And right now, while the broad altcoin market looks positioned for a rally, so the Fed does hard quantitative easing. This is the most bullish move that the Fed can do. Thanks for the comment. The most bullish, people would think, well, that's rate cuts, right? What if the Fed just suddenly slashed the rates to 0, right? They're at 3.5 right now. This is the global liquidity cycle, goes back to 1968. After COVID, it was such a supply shock that the Fed is on this downslope with the red line. The Fed injects money into the liquidity system, into the US economy, and then pulls it out to fight inflation every 4 years. Satoshi knew this. Satoshi was a brilliant economist, perhaps a team of economists and computer coders. Therefore, the Bitcoin halving runs parallel with the central bank roadmap, their 4-year cycle they used to control the fiat money system. Because they overprinted big time in 2021, for one, there's a ton of traders out there who have bad habits because they assumed their logic was working back then. They don't even know what Fed policy is. They couldn't tell you, hey, in November of 2021, there was an FOMC meeting where Powell said, hey, instead of doing rate cuts, instead of doing quantitative easing, let's go in the exact opposite direction. So we got the pedal to the metal, stimulating the economy. They do a 180 U-turn, emergency brake, peel out, and then they head in the other direction. Obviously, the market top is in. I was in Crypto John's group at the time. Being a successful day trader in the stock market, learning from Roaring Kitty, I said, hey, Crypto John, the market top's in, bro. We gotta wait like a year or two. It's over. Doesn't want to hear it. So for CASPA, this liquidity injection was a brief, just a 60-day injection of the Fed's most powerful tool, which is quantitative easing. They're directly mainlining liquidity into the economy at that point. If they drop the rates from 3.5 to 1, that's not directly putting money into the market, although it will have that effect. It's just incentivizing it. It's incentivizing BlackRock to sell their bonds and then roll that capital into the risk on market. Wall Street and, of course, altcoins are piggybacking on this. So because of Satoshi's design, building Bitcoin around the fiat system, cryptocurrency, it trades like a 4x to a certain extent. Forex traders, what are they always talking about? The yen carry trade. When was the last time, or the first time this started impacting CASPA? Locally, right here. Suddenly the yen carry trade goes haywire, the Bank of Japan starts hiking their rates, and CASPA starts a downside, which continues with multiple carry trades. So this rabbit hole goes deep. But it all starts, the bullish signal, back to the gem hunting. It all starts with a unique pivot from the Fed. So that's a pretty big one. The Fed goes and they do 60 days of quantitative easing. It's one of their strongest moves. It's a massive pivot, not just data, this time it's policy. What we're getting into right now is more of a altcoin sector rally. A brief rally, not a full-blown altcoin season because the Fed hasn't started to change policy, albeit they can. They definitely can because Powell is teeing up huge moves. Primarily, who watched the FOMC meeting? Press the like button if you watched that full FOMC meeting because it was super important for us. If you're a real estate investor, a stock investor, it's got entirely different messaging. But for altcoin investors and Bitcoin investors, the message is unique. Because of the Fed's decision will have such a high impact on the altcoin market because of Satoshi's design, because it's ultimately a 4x. So what did Powell say out loud at the meeting? What were his two most high impact talking points for the altcoin market? For one, he said the Fed's divided. We got 19 board members. More than half of them are leaning dovish, meaning they want to cut rates to get out of this oil problem. And that's in writing in the last FOMC minutes, official document. They're saying, yeah, we'll cut rates to get out of this conflict that we're in the Gulf. The other half, they're saying, no, we got to start hiking rates. We got to start taking a whole different approach. We got to handle this inflation. So Powell steps down. That alone, huge move. Huge event for altcoins. This is a trading plan released 12 hours before CASPA crashed. Hands off CASPA until Powell steps down. Just because the Fed's outlook was atrocious. With the May 15 inflation from last year, Separating the men from the boys. I'll leave this in the comments section. People who go over this whole May talking point that don't include Powell's May 15th speech that has created this massive trend line in altcoins have no idea what they're talking about. That's my opinion. It's such a massive event. So at this meeting, we have two big signals. One, the Fed's divided. Two, Powell said out loud, labor market data is trending downward. Powell verbalized a high impact altcoin event. Let me show you what I'm talking about, and then I'll give you a historical example. Jumping over to the total 3 chart and Bitcoin as well. They all started consolidating right here on February 6th. Anybody in the comments know what happened on February 6th? Labor market data got released. And it actually showed a lot of growth in the US labor market. So we're crashing down from PPI, tariff-based inflation here. And then suddenly the institutional investors are like, whew, we're gonna be cool. There's no stagflation, and the altcoin market and Bitcoin finally starts to stabilize after massive selling pressure just going on and on and on. I can see your comment, HXC. Trying to get a grip on macro data, Warsh wants low rates, but to shrink the balance sheet, reducing liquidity. I'm not sure how to process that info. We'll get into their policy in a moment because we're actually building into that right now with this labor data. So everything starts consolidating here, guys. On February 6th, guess what's about to happen? We're about to get another labor market data print on May 8th. It's just days away. It's happening on Friday, guys. Look at what went down for TAO. What are those 2 green arrows? That's the February 6th labor market print, and then the March 6th labor market print, which sent TAO's rocketing to the upside. What happened? We got a pivot in data. It showed a massive reduction in new jobs. What are all the headlines in the Wall Street Journal? AI is replacing jobs across Silicon Valley. This is a trend we all know is happening. The technology of tomorrow already exists today. We're just waiting for it to get distributed. So all these Claude bots and everything, all these cool grok images that make a beautiful woman answer your questions, talk regular lingo with you, this is all rolling out across Wall Street. We can see dulled down versions with like AI chatbots, right? Like, do you need help? And you can kind of talk to a chat GPT. This is all going to get upgraded to the nth level. They're thinking your cell phone is just going to be one giant AI. There's not going to be individual apps. It's going to put Apple completely out of business. So the trend is, on Friday, we look at the labor market data. It shows extremely low numbers, and the economists, they anticipate this ahead of time. It's called the consensus. And right now, guess what the consensus is? They're thinking, oh yeah, it's going to be low. I don't even want to scroll through that. I'll just tell you. Last month was 170,000 new jobs. They're saying this month's going to be 60,000. So if we can get a super low print, like 20,000 new jobs, even below 60, the AI sector is going to cook. Why? Because it's going to sway the Fed, who's divided on how they're going to take care of the economy today with these multiple layers of inflation. Starting from, they never even got rid of the money printing from lockdowns. And then you got tariffs, and then you got the Gulf conflict. So all this inflation they have to handle. what the chatter is, they're just going to plow through it with growth. They're going to start cutting rates, and that's getting into what you're saying, how Walsh is going to take a unique strategy, lowering rates while he's still doing quantitative tightening. That way it won't impact inflation. Right now, the Fed's doing soft quantitative easing with Treasury bills. That's how we time the river, 30x rip to the upside. That's another key point where Powell verbalized a policy change. You remember that meeting? It was on December 18th. Powell said, we're going to restore liquidity. I'll pull up some official super nerdy documents right here. 2 weeks before this came out, Powell said, we're going to start buying Treasury bills. So in our VIP group, we're looking for real yield, Genius Act, stablecoin projects that are using Treasury bills to provide yield to retail for a sector-specific rally. Looking at the total three, as soon as that FOMC minutes was released, this one we're looking at, there was a bit of a rally. There was a bit of a bunny hop. Of course, it sold off after. River did 30x upside though. As soon as this hit, it went flying to the upside. And what's the point of buying all these Treasury bills? They're not building the Fed's balance sheet to answer your question, HXC, which is good, because soft quantitative easing, it's not the hardcore Treasury bill purchases that they were doing back when CASPA shot up. They were buying long-term bonds here, 10-year bonds, 2-year bonds. Those are the most bullish catalysts. The longer the bond, the more bullish. So right now they're just doing Treasury bills. So it wasn't enough to kick a full-blown altcoin season like it was previously, but it was enough to kick River off to the upside for sure. Here's what the outcome is now. Notice how it keeps saying the word April, April, April. Because of the government shutdown in Q4, right before we made that CASPA post, then the Morgan Stanley regulation comes out. Now the market crashes. Because when the government shutdown happened, there was extremely thin liquidity. Right here, the Fed decided this is an FOMC meeting when they vote on the dot plot. Originally, they had planned on 3 rate cuts consecutively moving forward on this chart. They took it all away. They did 1 rate cut right there, right then. Government shutdowns going on. Now you got a problem because the Treasury bill markets are closed, everything like that. Liquidity super thin, a crisis that actually reflects CASPA, but this time, instead of unlocking the long-term bonds, which kind of impacted inflation, they noticed they're learning. They're doing this on the fly. It's not like set in stone that this is going to work like a clock. They're kind of feeling their way around in the dark. So the Fed decides, well, we'll just do Treasury bills until April. Very important FOMC minutes is about to get released after this super important jobs. So first we got the jobs on Friday, and then about 10 days later, we're gonna have another FOMC minutes, which is gonna say, guess what? The April liquidity restoration, it went better than planned. Right now, economists are measuring they have extra liquidity. And that's bullish. What's gonna happen, what's gonna internalize is these institutional level investors that are using the labor market data like on March 6th to buy into TAO, causing it to rocket to the upside. The support and resistance, exactly on PPI data. We had those outlined inside VIP. I'm not going to pull up the trading plan. We had those outlined as support and resistance, take profit level 1, take profit level 2. And it's been bouncing off those levels like a ping pong, just underlining our thesis. Also highlighting the May 15th trend line. Interestingly enough, Zebek, first group to start talking about Zebek We put it together as a inflation-based trade because it manages supply chain dynamics. The May 15th trend line, which has to do with tariffs, when Powell came out, actually flipped into support. So we can see that tariff inflation correlation. Now we can track tariff inflation. It's a specific difference between headline, core. It's advanced stuff. The VIP members know we cover in every post. Takes a while to really get up to advanced speed with this stuff, but we can track tariff-based inflation. Originally, the Fed said that would pass by late summer, then they delayed it to December. Now they're saying it's going to be until the Gulf crisis is under control. Then we'll evaluate tariff inflation. So for our store of value projects, for the big rally we're all waiting for the Fed to really go gung-ho, can be a minute. In the meantime, it's going to be very sector-specific rallies. So we just explained what Powell had just recently in 2026 verbalized and what he just verbalized within 10 days' time. The divided Fed and the labor market. Now we're getting into tactics and strategies for how to find these. And a really great example is SIREN. Zooming in here. Right here, that's that February 6th labor market print. So it's sideways consolidation, it's really quiet, it's really low volume, and then February 6th, that's that huge event that starts consolidating Bitcoin and altcoins. SIREN got a big bump. This is the tactic as old as time. We're looking for insider buying. Our interpretation of that is institutional investors are loading up on this, and there's tons of people who can explain. Market makers, they're controlling the price. They set the bid-ask spread. They've got spot positions. They've got perpetual positions. They're in control. So when they're loading up, we want to get involved. Particularly this AI narrative aligning with the labor market print. Fast forward, the next event, March 6th labor market, TAO takes off running, but this one goes completely bonkers. Rips to the upside. Moving really in tandem with TAO. So how do we get to bio? If you guys have a position in bio, make sure you smash the like button. The bio swing trade, we had already outlined what we were looking for inside VIP only from reading Fed documents. We're looking for this April liquidity injection, the restoration since the government shutdown, to hit the markets. Now, the reason why we're targeting AI, partially because of the labor market signals on the chart, but also because the Fed's telling us we're targeting AI. What they're saying specifically in these documents, AI is borrowing around 7% of all the liquidity available. Therefore, just like this bunny jump here on Caspa, in April, when more of that liquidity gets available, we know already it's going to target AI. Therefore, our trade hypothesis is, just like on SIREN, the institutional investors are going to start loading up here. And a more practical chart, TAO. And of course they do, as soon as the data confirms their thesis. Now this exact event is happening again right now. This article shows as liquidity is coming in, it's hitting the AI sector and affecting altcoins, and the one it affected is bio. So Crossbridge Bio, which is a company seed funded by VitaDAO. Guess who seed funded VitaDAO? Pfizer. So Pfizer builds this years ago. It's almost like a test net for bio protocol. This VitaDAO company seed funds Crossbridge, and as soon as the liquidity hits the market in April, we know it's going to the AI sector because of the Fed documents, and we can see Eli Lilly, they're buying all of this looks maxing, you know, those weight loss injection drugs, the hair drugs, everything. Ozempic. All this Ozempic, all these bodybuilder injections to make you look good, feel good. They're in on this. Definitely a black pill narrative because it aligns with looks maxing. Right now, the masculine image has kind of been looked across. There's young kids across the internet saying, yeah, we're looks maxing now. We're making ourselves look good. This is aligning with this cultural pivot of the Ozempic movement. And it's really showing that Fed narrative. So we already had the skeleton set up for what we were looking for. April 14th. So with TAO, with SIREN, it was jobs. With River, it was that FOMC minutes right there when they say we're going to start purchasing tons of Treasury bills. The liquidity will be restored by April. What our most recent signal was, our insider buying signal. Let me talk to you about PPI inflation. This definitely ties into that whole inflation and that May 15th trend line. If you guys don't know about the May 15th trend line, read the comment and watch some of our other videos. So this top and then this key trend line, you guys probably watch Gareth Soloway. He is the man. Great trader. Works with Bitcoin and stocks. Of course, we go into lower caps. He's using 84K as a target. That happens to be the PPI data level. Adding all PPI data, and this is very similar to the May 15th trend line. It's inflation data. There's a difference between PPI and CPI. PPI is producer, CPI is consumer. When tariff inflation hit, it only affected PPI. And they assumed, well, the producers are just eating all these taxes and they're not passing it on to the consumer yet. Yet is the key word. So PPI has been really high, very bearish. Look at this. Each candle, when that was released, it just starts dumping instantly. Right here, January 14th. Typically, it'll be the Sunday, Monday when the markets start to reopen, like the DXY. Unfortunately, this DXY was sabotaged by Iran bombing. So PPI has been coming in super bearish, right? Inflation is high. Inflation is high. Suddenly, out of nowhere, on the 14th, inflation is low. And this is extremely bullish. There's no way we're going to be able to, using this tactic, find bio here. A beat once that April 14th event takes place, now we've got the insight. So what? It moved from 2 cents to 2.5. But now we know, hey, this is an insider buying signal that we're lined up for as this Fed April liquidity injection comes back and targets the AI sector. This is the skeleton of the project we had already drawn out. We didn't really find bio, but we had drawn out this activity with money coming into the altcoin sector right now. And it's coming through Pfizer, which seed funded VitaDAO. And these guys. So we're scooping this up here. It has another aggressive buying here. We're scooping it up here. the durable goods comes out, and actually medical stuff is considered a non-durable good. Durable goods and Powell's meeting takes place, and then this thing starts to rocket to the upside, now consolidating again. It looks like that conflict in the Gulf has halted it from flipping the May 15th resistance line early. There's another vetting principle that we're using here that everybody's overlooking, but it's writing on the wall. I want to give it to you guys so you have it moving forward. Look at VVV. Smash the like button if you remember back in the day, people were saying, oh, VVV is nothing, it's going to go to zero, it's a terrible project. That was a really popular narrative. VVV has surpassed the May 15th trend line. VVV has been doing great. It's like getting close to $1 billion market cap. It's a nice slow burn to the upside. VVV aligns completely with the Morgan Stanley regulation. What that MSCI regulation is, they released it while the altcoin market was in the liquidity crisis that they just finally fixed. 12 hours after we made this CASPA post saying, hold up guys, CASPA's in a bear market at least until Powell retires. Just DCA into cash and wait. Catch some swing trades on the side. Right? Rotate into cash and wait. Now, I know a lot of people like to use hodling, but remember, don't abuse that term. Hodling's an awesome strategy. I like hodling too, but we don't want to hodl through like a 2008 financial crisis. We have to be in tune with the central bank to get out of the way before those happen. Hodling is a tactic, not a strategy. Our strategy should be economics and its impact on altcoins, in my opinion. VVV has completely embraced getting away from the Ponzi-nomics of crypto. Remember back in 2021 and before? Because there was such a low volume of user base and there was zero regulation, what did they come up with? Ponzi-nomics. Smash the like button if you remember in 2021 how they had nodes as a service. I want to say it's Strong Block. Remember that project Strong Block? Nodes as a service. It's just pure Ponzi-nomics. So they open an Ethereum node. You're getting a portion of an Ethereum node which pays you almost no money, but there's these huge Ponzi-nomics. People made millions of dollars who got in on it early, and then that spawned just entire copycats of this Ponzi-nomic scheme and larger projects. They just encode this tokenomics, burn mechanisms, token lockups. The Morgan Stanley regulation is moving away from that. They don't want to see that in crypto. That's giving crypto a bad name. Worse than meme coins. Meme coins, they're going to allow to let fly. And actually, I'm going to let you guys in on a secret. There is a huge underlying factor that's connecting bio and troll. And this factor is trending right now in altcoins. They don't mind the cultural meme coin trading as much as they don't like the tokenomics of Ponzi's. What this project does and what we're looking for with projects like Bio is we want to see more cash on the table and real world projects. This VVV creates an awesome AI image generator that you pay a monthly fee for and you're in. Boom. Like going to the Wall Street Journal. You pay a monthly fee, you get your Wall Street Journal. Now they start running the Wall Street Journal on a blockchain and it enhances it. Now you're talking. Those are the kind of projects that we want to have our eye open on. So Bio actually making real world products connected with the looks maxing community, that's what's up. USA one beat. Our group, super high value. So a lot of the skill set that we're doing here, and a lot of this is you're hiring someone to work for you. I learned all this stuff with macro data from Roaring Kitty. You guys remember the guy who ran the GameStop trade? I was in his VIP group. I show my GameStop positions all the time. This is a trade I took on GameStop a week before it started rocketing to the upside. So being in Roaring Kitty's group, who went to a school to learn economics, got a job as a stockbroker, so he was able to correlate everything together and then teach it to people, was great. And part of it is processing all this data, staying on top of FOMC minutes, labor market trends, jobs reports, how that's impacting altcoins. There's tons of advanced traders in our group like you who are like, yo, for 47 bucks a month, I've got the Wall Street Journal, I've got routers, I'm gonna get this guy's group, huge value. We're tracking all this stuff and putting together a trading hypothesis. And right now, we believe we've solved a key vetting point. Both bio and troll have one unifying concept. So see if you can figure out what it is this afternoon, and then you can jump into our VIP group and find the answer for yourself. This is a hot trend in altcoins moving forward. In fact, Egra Labs might just be working on this right now. Oh, Powell is still in the game. Believe that. He's going to be on the board until they drop the lawsuit. Here's the thing, though. Powell was being extremely kind to the markets when he verbalized these 2 points. The Fed is divided. Labor market data is trending. Therefore, the Fed is going to sway one way or the other based on the May 8th labor market data. Of course, this can blow up in our face, right? Let's say the labor market data comes in and it's not supportive. This could go for the bears. But the consensus is anticipating it's going to come in low, which will pressure the board to start stimulating the economy, to start making the black line, which is how they actually work it, move to the upside. For people who just got into crypto for the prior cycle, that was, in my opinion, the worst time you could have possibly started investing. Because the Fed was really still fighting off the money printing. We never got a full-blown bull market. And what they'll teach you in these huge seminars that cost thousands of dollars they have in Las Vegas ballrooms that I've been to, they'll teach you all this stuff, and they'll mention, yeah, the real bull runs that we're looking for are only going to happen statistically once in a decade. It's like once every 12 years. So one already happened in 2021 with the lockdowns. That was their big money printing. When one comes, we want to know our stuff. And this also goes into hunting gems right now. Of course, we're in the middle of a bear market. This tactic that we've been finding 30x rips in a bear market, guess what's going to happen when the Fed pivots around? Starts throwing some WD-40 in the gears. We're going to start hitting monster rippers. So now's a good time to get comfortable with this strategy, with processing Fed data, how you're going to manage your money. This is another key talking point that a lot of guys in VIP Discord ask me. So we had another project picked out in the AI narrative. So we definitely want to emphasize it's AI that we're looking for. PRL. what they do is artificial intelligence, those data centers, but they're not built from surfing the web. In fact, you guys know Crypto Galaxy? You remember how he kept doing all those thumbnails with like $5 a piece on it? That really started impacting AI database for Caspa. Like, how many of you guys have asked ChatGPT how high is Caspa going to go? And then it would be like, some people think $5, but more reasonable people think 30 cents. Of course, I'm guilty of making those thumbnails myself, but remember in all those videos I said the Fed would have to do this, and the Fed never even got close to that. What PRL does is it makes human AI data banks. So let's say it's about Las Vegas real estate or heart surgery. They take the best heart surgeons in the world and they're building the database, vetting it, so it's not just random glop from the internet. It's high quality data sets. And this, actually, now that I'm thinking of it, actually aligns with Troll and Bio for people in the VIP group. You know that key focal point right now? They're definitely using that for their human-made knowledge banks. So this had massive aggressive buying here at that key turning point. Remember, April 14th. That's when the PPI inflation event happened right here. Started the rally on Bio. We got aggressive buying here. So we're like, okay, this is good. Meanwhile, we're waiting for the Bank of Japan to make their decision on rate hikes. And that set this one off a bit early. So we were waiting for the FOMC meeting. Some people just went ahead and started DCAing at 20. I was on the sidelines on this one. I was lucky to be up in the middle of the night. After the Bank of Japan ruling is solidified, it rocketed up, and I luckily caught it here, but then the rally's already up. It's consolidating now, getting ready for more growth based on this hypothesis. So for traders who were able to pick it up while we had trading plans in here, here's another round. And this does align with the Troll and Bio narrative. Oh yeah, back to money managing. So what I'll do is we usually have 2, maybe 3 projects picked out for these big events. Once one starts to become the clear winner, I'll buy all 3. And then consolidate into the clear winner. So I ended up collapsing my PRL position, some small gains, into Bio. Technical analysis, that's right. There's a huge signal on the total 3 chart right now that really shows strength, and it rolls over onto Bio too. So we got the 1-week stochastics. This is similar to RSI, yet is very different. Notice how when the stochastics is up, price is peaking. When the stochastics is down, price is down. The stochastics has been down for an extended period of time and is getting ready to rally to the upside. Now, with all of our Fed insight, with this April liquidity narrative, there's a great chance that this technical signal will continue to the top of its oscillator, providing growth on the total 3 chart. Our first target, obviously, January 30th PPI. Absolutely. If you want to be cautious about it, I'll walk you through what we do inside our VIP. So our key resistance line, remember, it's that May 15th trend line. Watch some of our other videos, read the comment I made. You got to be up on what May 15th is. It's almost criminal that there's so many KLLs that didn't talk about May 15th. It's the most important altcoin event. On any chart, there's a massive resistance, starts on May 15th, and it's directly connected to tariffs. Interestingly enough, Zebek, one of the only tariff bullish projects, cross-chain supply chain management, it actually used that as support. Just really hitting it with a highlighter. Yeah, tariff inflation. So we want to get on top of this and start one of these VVV moves. bio really does align with Morgan Stanley regulation. Once we flip the May 15th trend line, it's on like Donkey Kong. Let me show you another really strong project we've been buying at a discount inside of our group. Ondo started sparking up today. Did you guys notice? Look at this aggressive buying here on CFG. Guess where those aggressive buying wicks go right to? I'll give you one guess. So they're aggressively buying all the way up to May 15th. We get paused out there, but guess what? We got this huge liquidity coming. It's time to flip this from resistance into support. So you want to get into bio right now. We're seeing, based on the liquidity restoration, this happening in real time. It's supporting growth in bio. What we need is the right labor market data. So at the meeting that just took place, Powell says out loud, the Fed's divided, but the labor market has been consecutively trending downward. Sounds like a lot of really acidic, mustardy number type talk. But actually what he's doing is a favor for investors, particularly us altcoin investors, because that's a high impact event. The last time Powell verbalized a policy change was on December 18th when he said, we're going to start buying T-bills to restore the liquidity, a liquidity restoration that just completed. So when the May FOMC minutes comes out, 10 days from now, a week after this labor market data, that's also going to help. We're anticipating this is going to help the rally because they're going to say the liquidity's been restored. In fact, we printed a little extra money just to be safe because it won't impact inflation because it's short-term bonds. They just did T-bills. That's why River went off. So at this labor market print, you want to see the same type of data that set, let me see if I can zoom in on this image. The same type of labor market data that set TAO rocketing to the upside. See this non-farm payroll? That means new jobs. So the prior count was 126. The consensus, meaning what the economists are anticipating, 59. It actually came in minus 92. So all of a sudden, AI is taking over the job market. This sent TAO and this sent SIREN into the banana zone. So for bio particularly, we'd like to see that trend of low labor come in. Smash the like button if you know why. Because that's going to take the Fed board, which is kind of 50-50 divided, and they're going to sway to, we're going to start stimulating the economy. In the last FOMC minutes, we highlight this for the group members so they're reading all this important data. You don't want to dig through the whole FOMC minutes all afternoon. It's going to take you 4 hours to do it correctly with experience and AI. So you've got AI agents, you're experienced at reading them. It's all afternoon just to do the Fed data. Just to get the Fed data summaries correlated to the altcoin market, there's a huge value. I'll tell you what they said in the last FOMC minutes. They're anticipating they overprinted. The debt sector, which CFG does tokenized debt, the debt sector is booming. So there's kind of a support line set up at the April 8th level. And they also said this. Oh yeah, slipped my mind. They said right in writing, we'll cut rates. We'll stimulate the economy to get out of this Gulf crisis. They put it in writing, guys. So we know that. That's our ace in the hole from doing our homework. This is why tons of advanced traders join our group because we track all this stuff and give it to you in easy digestible format. We're experienced at doing it. We caught the May 15th event. Nobody else did. We've caught ultimately every market top. We posted this about CASPA 12 hours before the market crashed. Do you know why we got so bearish right then? Because the FOMC minutes. It said right in it, the banks are out of money. There's a liquidity crisis from the government shutdown. Now, having experience reading through Fed data, that was a tough call. Other times, it's been so obvious, like on May 15th, that I can't believe the rest of traders aren't automatically saying, oh yeah, the market's over. Like here, at the FOMC meeting in November, they're going full blast quantitative easing, full blast rate cuts. They do a 180 in the other direction. It's over. Right then, the bull run's over. Clear as day. Here, you can get this on TradingView. Just type Jesse AI and it will show you every FOMC meeting so you can see how they're impacting. These green ones, they vote on the dot plot. So they're voting on how many rate cuts they're going to be. Guess what they did right there? Originally, they planned on having 3 or 4 rate cuts moving forward. They removed it all because of tariffs. We were able to sell that top, projecting it would all fall apart at the January 27th FOMC meetings when the Bank of Japan hiked rates. A little bit more complex, but you could have sold here and waited, or here and timed it perfectly. Right here, what'd they do? Green emoji. They removed a bunch of rate cuts. What did they do here? They added a bunch of rate cuts. And we've got these for every indicator inside our VIP group. So you can see how, let's say on virtuals, what's virtual's number one highest impact event? Obviously durable goods. Durable goods, this is also for Tesla because it handles cars, tracks how many cars are being sold, manufactured. It does robotics and artificial intelligence. So way back in the day, starts ramping up, warming up before a durable goods print that the economists are already projecting, hey, this is going to be a bullish print. Get ready. Then it hits. It's on. The next one comes out. Now it's confirming data, trending data, and it just tears. Look at that candle right there. November 27th. Virtuals, right? Pretty puffy. Tears up at durable goods. What's the local all-time high candle? Durable goods. After the May 15th event. So as we're setting up charts, looking at these macro events helps us a ton. So we're definitely going to run into that May 15th resistance level. Now there's a sequence of events coming that economists and myself are anticipating will be bullish. Let me break it down for you. The jobs report, we already went over that. Powell has ultimately teed this one off. The last time he teed off a policy was Treasury bill purchases. That's how we got the river trade. CPI, this has always been bullish. Remember, we were just talking about PPI versus CPI? That PPI inflation, this has been massively bullish. This is tariff inflation in today's market. We just recently had a surprise print. The PPI came in super low. Lower inflation, that's great. That gives the Fed, who's right now undecided, are they going to be hawkish? Are they going to be dovish? This justifies, gives them elbow room to stimulate. So we can get another low PPI. It's great. So first it's jobs. That's on Friday. Now let's say the jobs comes in super low like we want, like last time. don't forget that there was a delay over the weekend, and we have post inside VIP to cover why this is taking place. There was about a 48-hour stall out, and then the breakout starts on Monday. So there's the Friday print. We get a stall out over the weekend, and then the breakout happens on Monday. Unlocks, rockets to the upside. Anticipate something like that with a low labor market print. Then we have CPI, already trending bullish. So that's kind of a gimme. And that'll help us out a bit. Here's a massive cornerstone that's going to affect BIO's price. The reason why we do sliding scales is because we're anticipating all outcomes. And this is the best part about this trading method. We get to see all the cards and then bet. It's beautiful. Imagine you're playing poker down on the strip and you get to see the turn in the river and place your bets. It's beautiful. So the FOMC minutes, the reason why we have a green circle here is because we believe the FOMC minutes is going to talk about how they restored the liquidity, because all these other ones kept saying April, April, April. This one's going to say, yes, the liquidity restoration was successful. In fact, we overprinted money, which for the institutional investors who are on the sidelines waiting to position, getting this money incoming into the AI sector from the CapEx, they're going to load into projects like Bio. Imagine how many companies are now able to borrow more money from the banks that want to get involved in this looks maxing black pill trend. Think about that. So we've got consecutive bullish prints. The jobs report's the most important. We want to connect with that to get really good growth. If we get a PPI that's bullish, low inflation again, it's on like Donkey Kong. So best case scenario, jobs comes in low, CPI keeps trending bullish, PPI repeats last month, comes in bullish again, and then the FOMC minutes explains the liquidity crisis. It's going to be a rocket ship. Now, there is a thesis that it's going to be more of a slow growth, slow burn like VVV, and just keep trucking along. This started at the February 6th jobs report when everything started consolidating, and has since then done about a 6x. This can be a slow burn up to that 500 million market cap, and then we're waiting for Clarity Act regulation, another major catalyst, and then we go into the banana zone. Money management wise, for me, I already went over my personal strategy, so we had 2 picks in the AI sector for this big event. 2 picks. PRL was the other one. I, being an American, like to go for projects on Coinbase. I also find Coinbase projects outperform everything else. The Binance has a reputation for being really dumpy. So PRL, guys, smash the like button too, because this is a hot pick. This takes me days and days and hours of research and reading to come up with, and I share it with you guys for a like. My money management tactic is, once the key winner started forming based on technical analysis reads, right, really honing in on the chart after Powell gave his FOMC meeting speech, a lot of people are using that to go live. I can't go live because I'm trading and analyzing the data for the group. So I'm seeing right after Powell's speech, supportive candle formation. I like it. Where was Powell's speech? And so I collapsed profits from PRL into here. Now, with the upside, I'm holding until we flip the May 15th resistance. Once we flip that, typically when you see projects break above it, there's a really strong reaction, like any resistance being flipped. I want to take my initial out. So somewhere around 12 or 14, I want to take my initial investment out, which is 3 and under, 3 cents and under. And then leave a huge chunk. What I want to do with my initial is DCA into more CFG, particularly in the event that it's underneath the May 15th trend line still. This is something really solid. TVL's running. The TVL is running really strong. This can flip Ondo as the top RWA project. What we've been noticing in VIP is there's a back and forth between tokenized stocks, which is CFG. They run the S&P 500, and AI. So just recently, these RWA projects were running. Now the AI projects is running. And we see this in the data in group. So logically, when AI peaks, I want to rotate some of that back into RWA. Oh. This is a perfect example of when our footwork was good. Somebody's asking about Clanker. So the narrative lines up on Clanker. We can see this liquidity injection coming in. We can see that it's hitting the AI sector. So our footwork is good. Giving you another example of how you can have good footwork using this Fed data, but you didn't get the exact right project, STBL. So this was started by the founders of Tether. It's a real yield project, just like River. River ends up doing a 30x, same exact narrative, same exact Fed signal, but stable doesn't do anything. Here's what I'm thinking on Clanker. Notice how Banker Bot went a bit higher? Let me rephrase. Not what I'm thinking. I never share what I'm thinking, my opinion. What the hypothesis from this Fed data, particularly Morgan Stanley regulation, okay? Let's take our filters that we've built and strategically do this. Nobody wants to hear when anybody's thinking. We want to see systems and hard data. So there's the Clanker versus Banker Bot battle. Why did Banker Bot outperform Clanker? Using regulation. Well, the Morgan Stanley regulation, they're supporting projects that are moving away from this heavy tokenomics, these Ponzi-nomic token unlocks, token burns to provide upside, and they're moving into projects like VVV. VVV's business model is simple. You pay a fee, you get a service. Clanker is going to need bull run momentum for their tokenomics to really even take effect. And so our strategy is targeting the institutional investors. There's been a ton of wallet activity in Clanker. This is why we thought it was so good. There's wallets 3, 4, and 5. There's the girls who run their Twitter feed. So all these insiders on Clanker are loading up, but it looks like they're loading up for a hodl position, not an immediate breakout. So Clanker's still strong for a hodl position, but for an immediate breakout, the institutional level investors are getting along with this MSCI regulation. It's heartbreaking because we like Clanker. It's a great project. There's a ton of bullish stuff about Clanker, but it's not making it through our vetting system using this regulation. It was something that we may have overlooked. Bio, much more aligned with that Morgan Stanley regulation. Not only does this have a real business model like VVV, they actually have a real product. Peptides, looks maxing. Clavicular could be doing a bio product on stream. He's got the new bio peptide face injections or whatever those kids are doing to look better. So definitely consider Morgan Stanley regulation, because remember, that got deferred. At any time, they can come back and announce it again. You guys all watched Jonathan's big talk at the university? CASPA, in my opinion, has definitely been trying to pivot into that MSCI regulation. Egra Labs, they're actually building, I checked this out for everybody in VIP, the connecting Troll and Bio are both connected by one new upgrade that's happening on chain. Egra Labs might very well be working on this exact same upgrade for CASPA. So it's trending right now, and it looks like CASPA is going to get involved with Egra Labs, and it's going way beyond just AI. Somebody says, just admit you were wrong like everybody else. You may have missed our last video where I could actually bring up my taxes. I don't really want to put my 1099s out on the internet, but we can see all our trading plans. Despite the bear market in 2025, I successfully swing traded CASPA, and we gave it every chance. The May 15th trend line stopped it in its tracks. And there was only two other people I found on the entire internet that noticed May 15th. Meet Kevin and Traders Reality, the guy from England. They both handle stocks. So they had a different interpretation on it. We're the only altcoin guy I could find, because I looked everywhere. Didn't look like anybody noticed the May 15th trend line, which was one of the biggest events. And because we found that, saved my 2025. Yeah, so still early on bio. In the event Iran didn't just attack the United States, you guys have probably heard about that. What we were thinking was, and when we really zoom into the total 3, you can see a ton of chop. Look at Bitcoin, it's already above 80K, so Bitcoin went for it anyway. But looking on the total 3, there was like a ton of chop. It was going good, and then the attack happens, right? Now it's kind of trending sideways. What we were thinking was going to happen with bio was it was going to, sometime this week, before the jobs report, get up to the May 15th trend line, which would be awesome. In the event we can flip that just this weekend, and then, remember, we got a whole roster, so we get above it on the jobs report, then we get a bullish CPI, PPI, and then finally the FOMC minutes, which is going to highlight exactly what we can see has been directly hitting bio. And if you guys have found any other AI projects that have been getting capital investment recently in the past 30 days, please DM me inside Patreon or DM me on Twitter, because I want to know. Because all we found is Vita. Ultimately seed funded by Pfizer. So yeah, set up for a good bull run. Looking at the downside of Pfizer, of bio, steady token unlocks. I don't think it's going to be a big problem though. OP comes up with, how long do we anticipate a rally will last? Looking at the macro schedule, the jobs report comes in, that's when it's going to start, the Monday of that week. It'll roll through until the May FOMC minutes. What'll halt it? possibly the durable goods and the PCE. PCE data can definitely halt it, paired with a bearish durable goods. That's in the most bullish scenario. The jobs report could come out and we might not even get the rally we've been waiting for. But since Powell has teed it up, verbally saying at the FOMC meeting, the labor market's trending downward, I'm thinking, yeah, we're gonna get a rally there for sure. It also opens up the range on the sliding scale for bullish results. For guys in VIP, I found it really quirky that somebody said, just admit you are wrong. We're coming up with every possible answer. We wait for the data and then we roll with it. So we're almost we're kind of covering all of our bases. Once the data hits, then we get to make our market reaction. What do we risk with that? Well, we risk sometimes an early breakout like with PRL. So with PRL, we wanted to wait until the durable goods hit, but it just so happened this one took off 24 hours before our scheduled entry. But with the sliding scale, you're waiting for the data to come, analyzing the data. Let me show you the PPI data, because this was the signal that originally cued buying. It was the insider buying. So remember, PPI is the most bearish thing recently. It's the candle that started the dump on the Bitcoin 97,000 top, and then it sets this 84K trend line that master technical analysis, Gareth Soloway, he's been stating. I agree, using a different method. This is a hybrid method, so you guys use the emoji cloud. You've got some awesome technical analysis angle. This macro stuff is gonna partner up with it. Like you're a UFC fighter that's learning jiu-jitsu. You got a whole new bag of tricks that's highly effective. So let's look at the PPI. So the way that this works, this is the results. Let me show you before the PPI comes in what we're thinking. So we do a sliding scale, okay? This is 48 hours before PPI comes in. All we have is the economic anticipation, and they're thinking it's gonna go higher. And there's a big difference between core and headline. Powell actually started talking about that at the FOMC meeting. He said directly, we're waiting for headline to slip into core, something along those lines. Interestingly enough, we've been tracking that inside VIP just to prove, hey, we've been in this game for a while, we're on top of it. So we come up with a sliding scale based on what's gonna happen at 5:30 in the morning, an hour before the stock market opens. In the event it comes in less than or equal to 3.9, it's bullish. What's the altcoin impact? Risk on sentiment. BTC rallies. AI and RWA and altcoins have a strong rally. Okay, so we come up with this whole sliding scale metric before it even happens. Because it could have went either way. As we go down there, there's bearish, neutral, everything in between. So then it actually comes in and it's super bullish. So then it actually comes in and it's low inflation in both core and headline. So we're so advanced, we're doing all these divergent prints. Well, what if it's low in core but high in headline? And this is where we've been getting the different signals between CFG and RWA projects or straight to AI. And those have been very accurate reads, because recently the divergent data, one being high, one being low, that's been supportive of RWA. RWA is kind of like a safety net. When everything's more bullish, they go right for AI, the institutions. So it actually comes out and it hits bullish. So we're just copy pasting the bullish section and then connecting it to all of our bullish projects that we have lined out. And then now we're using it as a vetting point for this next trigger. So that was like the early signal. Now we're moving on to the next one. It's an awesome system. And it really just gets everybody in. You got your finger on the pulse of the central bank when you join our VIP group. And it takes a lot of work to put this all together and correlate it to altcoins. So huge value. What's up, Mike 1000? I'm glad that you brought up these two projects. So we're the OG of Zebek, and my hats off to the VIP members inside Discord. At one point, we had one of the largest altcoin Patreon groups of all on the entire app. And so our Discord was popping off when I released the first Zebek trading plan. There was 3 different projects that it could have been. All of them were for supply chain management. This is while we had already sold our bag because of tariff inflation fears. I can't find the trade right now, but the first Zebek trade anybody ever came up with was in our group, and it came along with 1 or 2 other projects that did supply chain management. And so the group members then went into that hard with our 24-point checklist. This is a system just to make sure that you don't forget anything when you're vetting a project. You go through everything, right? The team, the GitHub page, who are the VCs, just the whole 9 yards. Just make sure you cover all your bases. And they find, dude, it's Zebek, right? They're using the 24-point system. They're able to express it to everybody else. So our guys kind of started hyping up Zebek, and it took off. Zebek flipped the May 15th tariff inflation line, that's May 15th, into support, consolidated on top of it, and then broke out. So while it was on top of the May 15th trend line, very bullish signal, starts consolidating on February 6th, just like everything else. And then this pattern is trending right now. This is trending on AIXBT, which, using our 24-point system, how many of you guys have checked the GitHub of the project you're looking at? So you check the GitHub page, you obviously use AI to do it because you don't understand what the coders are doing, but the AI can tell you, and we can actually see in layman's terms, all the coders on AIXBT are working on a pivot into X402 payments. So that project can become a monster, and it's got the same chart formation as Zebek. Guess what that resistance line is? You guessed it, PPI, January 30th. Ouch, Rizzy says Clanker was delisted from Coinbase. Yeah, it goes with that Morgan Stanley regulation. Good catch, dude, thanks for that. Cled AI, okay, we've got a pick. Let's check this out and run through the macro filter, MSCI real quick. Oh, K with a kid. Okay, here we go. It's got a low market cap. All right, let's take a look at this on DEX. We'll get a better view of the chart and we'll align with macros. Definitely low cap. Our cutoff is right around 10 million. This does make it into the cutoff. When you're going sub 10 million, it's a whole new ball game. Okay, so this has a history. This has been around for a while. Let's see when the previous breakouts were. June of 2025. September, okay. Zooming in. We haven't seen any reaction to local market data. Therefore, there's no signals that are suggesting this is going to be an instant breakout. Although, from doing a deep dive on it, I'm sure you found value points. Thanks for bringing it up. Okay, Clanker was not actually delisted spot. It was only delisted from futures. Absolutely, Clanker still bullish, you guys. All the points that we went over are still there. Also, it kind of gets dumpy before it moves to the upside as well. The thing is, it's not aligning with Morgan Stanley regulation. It is kind of entrenched in the tokenomics they're trying to pivot away for. Therefore, plus that tokenomics design itself kind of warrants more of a bull run volume. Yeah, this is a good hodl position. It can. So Egra Labs, I've been doing a lot of research in this for the Caspa community. As you guys know, one of the first guys to start doing content on Caspa on YouTube. First guy to go all in. We bought at the FOMC meeting down here in April. Caspa's in great. But the Fed policy forced me out of the majority of my holdings. I still have some tucked away with my Bitcoin and Ethereum. But we had to get out of this. And we tried to trade it in 2025 and we just couldn't hold. Egra Labs, I've done a ton of research on. Let me get you guys up to speed. So here's what Egra Labs is. It's a team of half a dozen to a dozen coders. They're from all over the world, primarily in Europe. Some of the guys are from Israel. They have funding between $500,000 and $5 million. That's an estimation. What they're working on is a massive upgrade for Caspa, connecting it to AI, connecting it to the DeFi sector, hitting on tons of key narratives that are trending right now in Bio and Troll. These are two wildly different projects, but in the event you can figure out the uniting factor with Troll and Bio, and also what Egra Labs is working on, it's a huge pivot point going on right now in the altcoin market. It's trending hard. Bio's got it, so does Troll. And Egra Labs is working on it. In the event Egra Labs connects, and by connecting, they're listed on Binance and Coinbase with their new DeFi. It's on like Donkey Kong for Caspa. It is on like Donkey Kong. So we really want Egra Labs to connect. Typically, with those rollouts, which I've studied a ton of rollouts, let's take a look at Solana, for example. You get the DeFi, you get the smart contract upgrade, and then there's a wait. So it's not like a rocket ship. And in the meantime, institutional investors probably not going to lay into Caspa before the hard fork because it could fail. So once the coast is cleared, first they have to do the upgrade, then Egra Labs has to release their product suite. Then we're golden. With Egra Labs' success, and they're so important, they're going to be like VitaDAO. Money's coming in on chain. And Caspa has its advantages. The primary one, in my opinion, isn't speed. Speed is kind of old news. This is a recent study. Programmability, which the upgrade is going to target, this is what they want to see. Yeah, we get like a Trader Joe's on Caspa listed on Binance and Coinbase, then we're good. Anytime. When do I think Caspa is going to be bullish? Good question. So this outline that we made, posting it 12 hours before the MCI market crash, reading the FOMC minutes that came out 48 hours before, talking about thin liquidity, distributing all that information to our VIP group. We projected the bear market would go until here. Now we're reevaluating. Honestly, on the sliding scale of it, it's all up to May's data. I don't think the majority of retail traders, you guys watching this, understand by now. I don't think people realize what's in the balance right now for altcoins. The Fed's got a new chairman. It's kind of almost a 50-50 split. Powell's still in there going hawkish. This incoming data can set the tone for Kevin Warsh's entire seat as Fed chair. So we want to see inflation down and jobs down. That'll be all the Fed needs to come in with their new idea, because what they're doing, remember how we talked about when we were explaining when Caspa ripped to the upside way back here? There was a banking crisis. The Fed did long-term quantitative easing. That impacted inflation a bit. We saw that inside PCE data. This is why recording this stuff and tracking it is so important. When you join VIP, it's like an influx of information. And you slowly start to pick up on it, and then you become a market master. Inflation started peaking. This time they got smart, and they did soft QE with Treasury bills. Totally different. The data that's about to come out is so important. And it's going to impact how bullish we are for Caspa and when. Back to the point I was making. The Fed is feeling around like a blind man with a cane. They're feeling their way through this. Their strategy isn't as cut in stone as some might think or want it to be. They definitely stick to that 4-year waxing and waning, and we can see that with our indicators. They'll always follow that. That's how Satoshi built the Bitcoin cycle around this. The Fed's going to try a new approach. That's what they're talking about. Instead of waiting for the market to get panicky, waiting for jobs to crash down and everything to go bad, like lockdowns, and then come in with stimulation, they want to try to stimulate into growth. So, hey, GDP's rising, growth is going good. Let's cut rates into that. Like a whole new dynamic. Scott Bessant, who's a master economist, just like Arthur Hayes, that's the skill that these guys have that retail doesn't. A good way to look at it in boxing, a lot of you guys are masters of technical analysis. You're masters of fundamentals. You can study the on-chain data and come up with stuff 10 times better than me. This is just like being somebody who can hit with 1,000 tons of force in a boxing ring with somebody who has amazing footwork. we already know Floyd Mayweather's proved this. His hands are made of glass. He has brittle hands. He doesn't punch that hard. What does he have? Footwork. All the masters of boxing have footwork. What Scott Besant, Jerome Powell, Arthur Hayes, all of our Chad VIP callouts, it's footwork. And this isn't just for our long-term huddle, when to take money down, when to get excited about a bull run. We can go deeper into footwork. Remember the river breakout? Well, we knew it would be an RWA project. So our footwork was in line and we said, hey, it's either stable. We really thought it would have been stable. But we also had side bag swing trades for river. So with that sliding scale, we have usually pick 2, pick 3. This time it was bio or PRL. Bio or PRL. That's our pick 2 for this event that just happened. PRL bucked off early, so we kind of missed that one. This is footwork. Okay, and then we come in with our technical analysis, our on-chain vetting, and we figure out what we want to go for. We look through the wallets, everything like that. So for CASPA, we really want to see the Fed start to lean into this new approach. Hey, we're going to stimulate into growing GDP. Because what CASPA really wants from the Fed is long-term bond unlocking. That's CASPA's as a store of value. That's their golden ticket. When the Fed starts building their balance sheet, and Jerome Powell has verbalized this throughout the past year, they're eventually going to build their balance sheet. And it's been inside the documents. So when that happens, it's good for CASPA. I honestly don't. With the hard fork, the hard fork has to take place. Egra Labs has to launch their suite of projects. Then CASPA can start to pick up. There's some on-chain stuff that needs to take place. Vic Vinegar says, so realistically, the move everyone waiting for is more likely to come later in 2026 versus 2027. This has been ultimately a bear market. It's been very sector specific. Yeah, for the larger economic stimulation from the central bank, which is going to hit all of altcoins like a food truck, I mean, even deeper than that. So in these FOMC documents, I hate to be the bearer of bad news, but what I'm giving you is not my opinion. What I'm giving you is information from these documents, all right? And they're very clear. So originally, they said tariff inflation, which we proved through Zebek, TAO, and all these other projects, is the May 15th trend line. It's bizarre to me how nobody picked up on May 15th trend line. Maybe it's ego, pride, that they missed it. But at this point, it should be a massive talking point, in my opinion. That clearly represents the tariff inflation watermark. Once tariff inflation is gone, projects will start to reclaim that zone based on this theory and hypothesis. That's why Zebek is already on top of it. Zebek's an inflation project. It used that level as support. Projects that are on top of it, super bullish. What they said originally, and this is just what the Fed is saying, it'll take until late summer for tariff inflation to go away, thus reclaiming that trend line. Then they said it's going to take till December. Just last week, they said we have to wait until the Gulf crisis passes, oil comes back down to evaluate tariff inflation. What does that mean for the altcoin market? sector-specific rallies, the layer one projects that were running really hard in 2023, the Solanas, AVAX, ICP even, they can be on standstill for an extended period of time. Meanwhile, CFG, Monad, RWA projects, sector-specific, they can have their own microcosm bull run with the minimal stimulation the Fed gives. And this isn't my opinion. This is the Fed data translated out into the altcoin market. So I'm trying to keep it just as mathematical as possible. When you're in VIP, you get all of these updates as they're coming out, including all the labor data. So really the whole model that Scott Bessant used to crash the Bank of England, the whole model starts to gel in your head over time. Then when the next 2008 financial crash happens, you'll see that miles away. And that's a big money-making opportunity for you when you know this. You almost want that insane volatility. You'll just sidestep out of the way, let the market crash, and then buy the bottom. We've done this multiple times in our group using this method. Here, signaling downside here for 120 days. And here on May 15th, very important. Doesn't look like it on the total 3 because the Genius Act was going on and the total 3 includes stablecoins. It's going to be a big weight. Sector-specific rallies will have a clear visualization after May. We're going to need more FOMC minutes to see where the new Fed chair stands. Jerome Powell's reign of terror is over. Monad's in the same camp as CFG. CFG and Ondo just had some upside this morning. This is the exact same pattern that TAO and all these bullish projects showed. It's an Adam and Eve reversal. Psychologically, this shows the sellers coming in with force because of PPI data, and then the buyers saying, not so fast, meeting them with equal force, and then more of a slow buyers taking over the book slowly with the rounded bottom. So this shows the sellers are becoming exhausted rapidly and then grind it out over time. As the sellers become exhausted, now we're ready for more growth. This is a pretty decent resistance line here. It's getting tested now, and then it's ready for upside. What's been going on inside VIP with all these labor data prints? Recently, they've all been leaning into the RWA sector throughout March and April. After TAO and SIREN popped off, that was the final upside for AI. Now that these projects have had their oomph, their big push in data, the institutional investors going for those, now the data is starting to show up and support AI. And now we're seeing the trend in projects like PRL and, of course, Bio. Catching the bid. So Monad's great. It's got a whole ecosystem. The one that I didn't like is XPL. The reason we don't like XPL is the 24-point system. So this needs to be updated because this is what you get when you join VIP. We gave you a bunch of printouts. We give you basically a whole book on technical analysis, something that completely drives me nuts on social media. There's like huge KOLs on Twitter who don't even know the difference between an ascending triangle and a rising wedge. That's an ascending triangle. That's a rising wedge. This is a descending triangle. This is a falling wedge. A falling wedge is bullish. A descending triangle is bearish. An ascending triangle is bullish. A rising wedge is bearish. And it just drives me nuts. They mislabel things all the time. the best book on technical analysis. I've got them all on Amazon, Chart Logic. STBL, I'm in contact with the team. We had our foot positioning in December. We were pretty sure it was going to be STBL. I think we were a bit blinded because of the team with the 24-point betting. STBL beats River. But River was definitely on deck for the same foot positioning for that big catalyst on December 30th when the Fed started buying the Treasury bills. It didn't end up being STBL, it ended up being River. Fast forward to now, our two AI picks, PRL and Bio, same type of thing. Our footwork's in position. It's going to be one or it's going to be the other. STBL, still really strong. The Clarity Act will be a big pivot for this project, and they need to do some work on chain. They need to get connected with some bigger protocols. That's one of the big edges that River had over SDBL. River was going out and they were hooking up with beefy finance, big platforms like that for their real yield stable model. Stable hasn't done that yet. They're still building. So what I want to do for VIP members is go over some content on money managing, so when we get these big signals that like we can't miss, like the December 30th breakout on real yield projects, we thought it was stable, but we knew River was hot too. We had like half a dozen posts like it's going to be River. Definitely River on December 30th. How to track and manage money so we can pick the 2 or 3 projects that are aligning with our narrative that we vetted out to be the best, and then manage the money so we get it all in the right one for the breakout. Stable will come around. We have tools, 84 questions to ask AI. That's an extension of our 24-point checklist. So if you want to become like an expert in any one particular project, here's something that you guys can do if you want to do some research and burn through. Use the 84-point checklist. Research, what does Bio, Troll, and Egra Labs all have in common? What's that unifying theme? Because Bio and Troll are both trending right now. Egra Labs is going to build a project that connects with that. If you can figure out what that is, you might have an edge on the next wave of projects we're trying to put together right now. The next round down the road. Somebody's looking for the 24-point checklist inside VIP. So when you join VIP, you'll be at the home page. I want you to go over to the collections, and then you'll see this big menu screen. So all of our altcoin trades get put up here. Sometimes, for whatever reason, this menu gets discombobulated a bit by the actual app. So just scroll through the home page and make sure you didn't miss anything over the last couple days. All of our macroeconomic stuff is in macroeconomics. All of our DeFi trades are here, AI trades, RWA trades, Caspa trades, and then here's our macro data sectors. So we've got the meetings, the minutes, the jobs reports, the PCE, all this. We got some technical analysis just to make sure you don't call an ascending triangle a falling wedge. We've got a classic pattern directory that I admit I should have kept updating more in real time. And excuse me if you guys start to see some posts coming up in VIP about this, where we give real examples of these classic patterns in real time, all the odds behind them. So example, the psychology of a falling wedge, right? We got the psychology of a falling wedge here. how it shows the buyers and sellers structure, etc. That's not what you're looking for, though. And there's some videos on technical analysis, videos on using stochastics. This is where the new listings go. Here's our watch lists. This is the new member fast track. So definitely go to the new member fast track where we're going to read the last FOMC minutes. We're looking over, what the SEP plot is. We got a Clarity Act summary. We have this whole thing where we called every single market top, the real-time call-outs on how we did it. And then just some documents to get you up to speed on our whole concept, macroeconomics and its impact on altcoins. But you're looking for this, which is the 24-point vetting system. So there are videos about it, and then there's printouts. You want the printouts. Here we go, large font. Oh, we've also got a bunch of technical analysis spreadsheets. Yeah, you just go here and download this. It's right here. And then you have the 24-point checklist. Now, to show you how to fill them out, there's an entire video. And then you have the 24-point system. Now, to make it simpler for you, you'll also find in one of these menu tabs 84 questions to ask AI. And these are all old, so I probably should take them down. But it took me so much work, I just leave them up. These are 7 projects that we vetted using the 24-point system. One of them, we originally thought it was bullish. In the middle of the 24-point system, we found a glaring bearish point. So we're just like, we'll finish the report and use it as a bearish example. Some of these were big runners that they've already had their profit taking and they're done. But it's a great system. And make sure you cover everything. It's exactly how we found with AI XBT that they're doing the X402 upgrade, excuse me. This was really trending. People were copying this in 2023 because a lot of people were coming over from the stock market and they're like, dude, I don't even know what a smart contract is, right? So this will help you get there. You just have to read these FOMC minutes. And remember, you're using AI with this. That's why we have the 84 questions to ask AI. Have it summarize the white paper for you, and then you can go over it after. Otherwise, it's going to be in gibberish. You never went to coding school, right? So that's the menu screen. That's what you're looking for. Yeah, I see that comment about Coinbase and Binance running futures, but not spot. My opinion is a lot of it's relying on the success of Egra Labs. We really want them to come through and get one of their DeFi projects on Coinbase. And then that'll open the door. May 8th, labor market report. It's an hour before the stock market opens. Be there. Now, there's divergent data and all kinds of more complex way to look at it. The simplest way is non-farm payroll. You want to see that number go down. They're already anticipating it is, so at least in line with expectations. COAI, are you in VIP? Okay. Just like bio. I think that this guy might be in VIP because we highlighted this as an example of an AI breakout. There's that April 14th PPI. Remember, that's on our checklist. As soon as we get a unique macro print or we get a consecutive trend confirmed by like 3 or more prints, that's a big signal. So that April 14th PPI comes out and this thing catches a bid. This had a huge run previously. So yeah, we are anticipating that's going to happen. This is also forming that Zebek pattern. Zooming in on Zebek. See how it goes? Keeps testing that PPI print on January 30th. This is kind of accumulating into a breakout. Similar pattern. Yeah, absolutely. I'll show you another one. UB, AI sector project. So this is our footwork. Remember, our footwork is we know because of the Fed data. This is what we know. This is what we can prove. There's a liquidity injection coming in. It's going to target the AI sector. The best example of this is how we've seen these Pfizer, Vita DAOs start investing in biotech. We can prove that. What our trading hypothesis is that we've used over and over again, even back with CASPA. So we get this anomaly print here. This signals insider buying starting on April 14th on this AI project UB. Had we picked up on this and got it at the 4 or 5 cent range, nice upside. And that's the same model for COAI, same model for bio, same model for PRL. This is how we found SIREN. This is how we found River. The key point is we've got to be able to track macroeconomics and understand what's going on with all these prints, when there's a signal of insider buying, and when they're ready to tee off. Good question, Vic. So when we see this really aggressive buying, and this has been a pattern that's been repeating on target projects. Let's start with CFG because this is pretty much the most, no one can argue that this project isn't bullish as we go over to DeFi Llama. As we look at the iChain data, pulling up CFG, yeah. So this has huge rising total value locked. It's half the size of Ondo. The recent news, they've got the S&P 500 tokenized. Have you guys seen on Coinbase how they're like, you can trade stocks now? This aggressive buying, this is insiders buying. This aggressive buying, they're loading the bags. And notice how on CFG it goes right up to the May 15th trend line. And we can trace these back to key macro signals. These ones I don't have on hand except for the April 8th FOMC minutes. Do you know what was in that? It said, guess what sector's booming? Credit. They do tokenized credit. So immediately this clicked, and this is set really like a hard resistance, in my opinion, for CFG as it's testing the May 15th level. It's very common to see these aggressive wicks on projects that are bullish. There's other examples, but for bio. So our original trading plan was around here. We're scooping bio up at like 2.8. Well under 3 cents. And then we get this other wick. Just kind of confirming, yeah, it's good. And then we're like, okay, hold up. We'll wait until the FOMC meeting and the durable goods and actually the Bank of Japan carry trade. because they might have hiked rates. Remember, so them not hiking rates is bullish. And this is kind of in the deep end of macroeconomics, but it's also really important for CASPA because remember what the all-time top for CASPA was, guys. It was the Bank of Japan carry trade. And the Bank of Japan carry trade has been plaguing CASPA and altcoins since they released all this long-term liquidity back here off the KuCoin chart. It's a fairly logical hypothesis that the institutional level investors then took that long-term bond money, leveraged it in the Bank of Japan and invested it in CASPA. Meanwhile, Marathon Digital, thus BlackRock and Jane Street, they're building these mining operations. We had always hypothesized something big was going on with CASPA way back here off of this particular chart. And we waited for it to cool off at this FOMC meeting, and then we just bought it. At this FOMC meeting, my memory serves me correct, Powell said there'll be no more rate hikes, obviously because it was damaging the banking interior. So yeah, these aggressive buying wicks up are definitely a bullish signal at this point in the market. We're in a bear market. Some projects like TAO are bottoming out. Does TAO have those aggressive wicks? It's a larger market cap, might be more difficult for them to form. Yeah, right here, when it's testing its repeating trend line. Look at this. So even TAO, back here when it was bottomed, was doing its own version for a large cap, that aggressive buying, right? Plowing into that resistance. Are you guys familiar with the repeating trend lines? This is wild. It's hypothesized this is because of token unlocks. This doesn't happen in stocks. You never get trend lines that just keep repeating over and over again a zillion times, but on crypto, it's happening again and again and again. And this gives us a lot of insight. Guess what typically triggers a breakout from a repeating trend line on TAO? Labor market prints. Usually these will go right down to a labor market, then either consolidate sideways and break out at labor data, or right, like that's like a Friday, the Monday after, just like recently, right? Like here, it was Friday, it came out, and then there was a 2-day hold, and it was the Monday after. So this stuff is, even if your tactic is HODL, great time to learn this because you want to figure out when to sell the market top. Awesome. Well, congrats on the bio trade. The way I handled the swing trades for this setup, which we were really ready for inside VIP. Like we might have been able to flag SIREN down as a probable one, but for whatever reason, we didn't really like target it and be like, hey guys, don't miss this one. River, we did a pretty good job of, but unfortunately, we did think that stable was going to be better. So we're kind of like grazing these as we're still, just like the Fed, we're really ironing down our tactics. Now we're like, okay, in this bear market, in the current economy we're in, we've got a lock. And it comes down to bio or Pearl. We were pretty confident on that. So I got them both. I'm like, I don't want to miss out. I'm getting them both. And then as it became more clear that bio was going to be the big winner, Pearl started looking like it was going to sell off. It had that weird, it was the Bank of Japan that caused these to break out. So we had thought it would be the Tuesday durable goods and then the meeting, but actually the Bank of Japan was a bigger event for the institutional investors that caused this big wick. So once, I can't remember the Jerome Powell in Japan, once he made his claim, hey, rate cuts aren't happening, we saw these aggressive moves. I was up in the middle of the night reviewing data, and I was lucky enough to catch that on the bounce. But for bio, it was easy. We could just get in at 3.2 instead of 2.8. Still monster upside. And I just collapsed my PRL into my bio. So I've got a big position of it. All right around here. And, you know, I was nibbling back here on bio anyway. Nibbling in, but really throwing weight into it. Awesome, guys. So get ready for this Friday and all of May, because remember, Powell just gave us a mulligan, as he likes to say. He's given us a chance. He's teeing off for the altcoin market. He verbalized two high-impact catalysts. One, the Fed is divided. When the Fed is divided, the data has more kick to it because it's going to sway the Fed. He also said labor market is trending downward. Plus, we've got all our research that's been going on consecutively since we got bearish, making this post 12 hours before the Morgan Stanley crash. Obviously, they saw the bearish footwork and they made their strike, attacking all coins. And still today, we can see it's becoming a vetting, that Morgan Stanley regulation. So we want to keep that in mind. Is it an actual business using blockchain to enhance itself? Or does it rely on that tokenomic, Ponzi-nomic era of crypto that we're trying to pivot away from? So still some potential upside, undoubtedly. May is a packed, high-impact month. PPI was bullish last month. That was the massive April 14th. And we believe the FOMC minutes, based on all of our studies of it, will automatically be a free bullish impact event. So we just need to get lucky with jobs, which they're already projecting are going to come in our favor, supporting this hypothesis. You can go to myfxbook.com. I'll put the link, I'll drop it in the comments. And go over what they're predicting, because they're already saying it's going to come in lower on Friday. CPI's been trending bullish anyway, and PPI just flipped. So we can get a continuation in PPI. The jobs reports play ball. That's it. It's on like Donkey Kong. It's on like Donkey Kong. So I'm excited. Super excited. Thanks for checking out this video, guys. We'll catch you on the next one.